Rock with the Chris Patel, the Desi God. Life is great. Life is grand. The casino is back open. Everyone's not running for the hills anymore like they were. Chris, how are things with you, my friend? I haven't talked to you since last Thursday.
Tremendous. They're
Tremendous.
tremendous. Tremendous.
What makes it
Google is on a
tremendous?
roll. Google, man. Google's on a roll. We're just killing it on Google. Like the Google spreads that we have are just absolutely tearing it up. I have them in my portfolio. I put some in the wife's portfolio. So overall, we're in a really good place. Looks like there's really no stopping Google. At this point, people are finally starting to wake up at the what the real value for Google really is, and I think throughout the year, I think we're going to see some really good numbers coming out from their cloud division that'll help power the future growth. So yeah, we'll see where things go. But what about you? Do you have Google?
I have 300. Let me just, I just open it up. I always
You
get
just
it
have
confused because
shares.
I have about, no, I never got any spreads like you said. I thought about it
Mm,
and I went SoFi instead. Not nearly enough as I wanted. I always get my Amazon position and my Google position mixed up. I have
mm.
381 shares at Google at a $98 cost basis. And
Very
then
nice. Very
Amazon,
nice.
I have 367. So it's still a small position,
Nice. Okay.
but enough where I'm at least up 42%. So, but not
Nice.
nearly, not as much as I would like.
Nice. What's up to everyone in the chat? Read them off. Matt, let's see.
We got Uncle Johnny
Yeah.
talking about all the good stuff. The Rocket Lab Palantir. We got Beep Beep Boop Boop. Got Hot Adam. We got George with the J. We got Johnny Mac again. So it's cool to see actually some. And we got Dean.
Mhm.
We got Mao Zedong. But yeah, it's cool to see that we actually started getting a few members on the channel, which is actually pretty cool.
Yeah,
Something I really
that's
had
cool.
before. Um, so it's cool to have some people actually sign up, which is nice. I'd like to do this full time. You and I kind of hold a similar kind of thought process, like doing one or two podcasts a day full time, like every day, would probably be
Yeah.
something that I would love to do. But
Yeah.
but
Yeah.
yeah. But speaking of Google, man, I'm with you 175%. The the thing that I'm looking forward to most is people. I think some people have started to open their eyes to the GCP revenue that's coming in and the net income, but
Mhm.
I don't think people are fully recognizing like how fast now that the kind of overall SG&A for the cloud business is kind of like taken care of, how
Yeah.
fast that revenue will grow. And I know you on the side of like more of the AI space and the chips aspect of it, but I mean I think that
Yeah.
all kind of plays into it as well. But I just looking at how fast Google Cloud is growing, it's going to grow 30% year over year, and just it's just
Yeah.
going to. So anyway, I saw that many moons ago, and that's probably one of the reasons why I started investing so much. That and even several years ago, Google was trading at a discount comparatively on a price to earnings multiple from like Apple and
Yeah.
Amazon, Microsoft, all those. And so that's where I started picking it up in like the 2020 timeframe. And then
Yeah.
obviously it went out of control.
See, the biggest thing, and this is where I love numbers, right? Numbers at the end of the day will free you, right? If you look at Google and it's like overall its revenue, this is the part that I like about them. Even though their revenue is kind of slowing down, it's still growing. You see, even with the recessionary impacts and everything else, still growing. And they've got nice long tail of revenue growth that you've seen constantly compound itself, right? Yes, was there a period of super hyper growth? Yes. But one of the tragedies that Google really faced was this right here, their operating income, which was because they had hired so many people. Look at their operating income. It jumped from like 34 to like 78 to almost 82 billion a year. This is where companies typically get a lot of really complacent, right? It's like, oh, you've done really well, so you can hire as many people as you want, and then you kind of just, you go on like easy streak, and that's where problems tend to start. And so their operating income started to really take a nosedive, and that's
Mm.
where, you know, companies like Google have a lot of pricing power, and also they have good leadership ended up, making the right decisions. And you can see here, the operating income started to reaccelerate, growing at a 10% clip again. You see?
Yeah,
So
yeah.
this this 10% growth is going to keep happening and going into the future. Now, when you combine this right here, this operating income with a shit ton of share buybacks at the rate that Google is doing, about 70 billion a year, that means that on an EPS basis, Google is just dominating,
Mhm.
and that's the key. This isn't very, believe it or not, it's not, the thesis behind this is not nearly as complicated as people would let, people make it out to be. All the metrics wise, they're doing exceptionally well. You've got every metric that you can think of is just on a roll. And so the best thing you can do right now is just be, be 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 a little bit, risk averse, and go for it. The
Mhm.
company itself has a business model that, in my opinion, is pretty recession proof. So I know a lot of times we all look for, like, oh my god, I wish this, and we had this conference, well, this topic earlier today, which is, hey, should I buy this company or should I wait until it falls down further?
Mhm.
And I just don't see Google really going down much further than what it is right now, because it's already pretty at a pretty good valuation. And I think as earnings comes, which will be the true test, and that cloud revenue as it keeps growing, I think people, more and more investors, are going to start jumping in on it. And,
100%.
hopefully we get to a nice. I told people, I said $200 is like the minimum price target for me, based on today's valuations. I know some people are a little bit more,
And what
cautious
time
with that
horizon?
number.
The next 12 months? Next 18
Yeah,
months?
next 12 months. Next
Yeah,
12 months.
I get
You know.
that. Yeah. Dean, I
Yeah.
want to say thanks for becoming a member, man. I really appreciate it. Number 5. That's pretty cool. So
Nice.
can't complain with that. That makes me smile. Like I said, that small that little jolt. Like I've been doing YouTube for like 6-7 years, but like just
Hmm.
something as simple as that, like just
Yeah.
makes my absolute day. I agree with you on Google. I think that $200 is a lot though, but I guess it really all just depends on how much shares they buy. But the thing I wanted to touch back on, which I did say to you, is kind of like my mental topic for the day, which you already touched on, was like I see so many people being like, "Ooh, but Google's at $141 now. Like I really need it to be 120, right?" And it's just like, dude, like I had this conversation with my brother-in-law earlier. I saw some people talk about, oh, they wanted to buy Palantir, wait till it was 12, $13 again. It's like, to be honest, man, like depending on what your time horizon is, and like sometimes you just have to buy companies when they're there at a reasonable price. And Buffett
Mm.
says that. Like, I'm not saying like Buffett's the be all end all. He does a really good job, but I think he's true. But it's like you're never going to be able to afford great companies at cheap prices, because the cheap prices will most likely never come. Like,
Yeah.
how often are you going to be able to buy a Google at 80, $90? Like that was
Yeah.
a very far rarity in 2022. And it was because
Yeah.
of a wild macroeconomic trend that was going on at the time. And same thing with Amazon, right? Like, so if you miss those things, like sometimes, even though it's a little bit overpriced, you just kind of have to bite the bullet, you know?
Yeah.
Like, and you kind of have to read the market as a whole. Like, if everything is very bullish right now and the market's kind of heading in one direction, it's like you're not going to be able to find great companies like Google massively out of price. And if you do, you got to take those chances. And also another time though is like you see some people, they'll be like, "Ooh, this company's at a really cheap price." It's like maybe something actually happened with the company. Like
Mm.
I was talking to my brother-in-law. It's like people are his one boss is buying Target like hand over fist, and I'm like, I don't know. I'm like, I'm not saying that in the future Target wouldn't be a buy, but I think that from a management perspective, from just
Mhm.
the way that they're operating the business, I think you need to wait for them to turn around the ship before you really start to think about piling into something like a Target right now. And I don't
Yeah.
think people are truly doing enough due diligence, and they're just like being greedy to an extent.
Mhm.
And it's just like sometimes you just need to buy the stock. Like I put a tweet earlier after I saw somebody was like, "Oh, I wanted to buy Palantir. Now I'm not going to buy it because it's $18, and I wanted to buy it when it was 12 or 13, and I waited at 15 because I didn't get into it." And it's like, dude, like I've been overbuying companies for the last 10 years. Like when I
Mm.
bought Google, my first positions in 2020, I overpaid. NextEra Energy, I overpaid. Rocket Lab, I overpaid. Palantir, I overpaid. But the thing is, it's like now I'm in the company, and I I'm not saying like I am holding on to it because I'm bag holding and convicted. I'm buying into it because I was convicted and I knew that I wanted to be involved in the stock. Because the worst thing that happens is I've done this so many times, and this is sometimes why I don't mind overpaying, because in the grand scheme of things, I might be off 5-10%, but I know in the long term it's going to be 150%. And I might have like, it might make a change from 130 to 150% return. To me, that's not a big deal. Is I've looked at companies, and sometimes when you invest in so many different companies, you're like, not yet. Tesla is a prime example of this. Last year, when Tesla went down to 117 or 110 bucks, I was like, okay, let me wait until it gets to 105. Didn't fucking come.
Yeah.
So there was other things I was buying, like I was buying Amazon and Google at the time. So like I wasn't that upset about it. But if I wasn't buying anything and I was just waiting for Tesla to go to 105 or 117 or 80 bucks, I'd been fucking furious because I didn't buy anything else. Instead, I bought Google, and I can't complain buying Google and filling up to 4,000 shares on Palantir. But like if I was just sitting on the sidelines and I didn't buy, I'd have been pissed.
It's all right. I mean, each of us have that. Like for me, my the one that got away, you know which one it is for me? It's AVGO Broadcom. Like that's my girl from high school, baby. Like the one that everyone just stared at. You're like, man, you're so sexy, but you're just like, hey, I'm like, you're way too out of my league, and you kind of just like let her go. And then like the year after that, she's still single out there, putting herself out there, and you're just like, man, she's still too hot for me. And you just never took a chance on her. But the entire time, you were just like, oh man, that's the girl that I want to be with.
I've had two of those,
like,
and they've only replaced each other. But I'm not talking about stocks. I'm talking about women.
Women, I'm talking about stocks. I don't have any girls from high. I don't have any
you're
girls
done with
from high
that.
School.
You got the perfect woman in your life now.
I mean, yeah, sure. Yeah, that's about right. I would say it's just I became as I got older. I just became a lot more like, hey, you want to date? And if they said no, I'd be like, all right, that's great. I still remember the first time a girl told me, let's just be friends. I was like, I'm sorry, I have enough.
I got enough friends.
I'm not really looking for.
That's the way.
I'm not really looking for more friends. She's like, so you were only being nice to me to get into my pants? I was like, yeah, like, duh. Like, what do you think? I'm just out here spending my time with you because like I like talking about weird shit? No,
right.
Like, I'm here to get some strange. If you're not willing to give me that, which surprised me because she actually did date me after that. Which is I think that the thing that girls like. They like a guy who's confident.
They like the girl. They like the guys that are confident. They like the guys they can't have. So after you were like, no, I don't want to be your friend. I just like you probably were willing to walk away. She was like, oh, maybe this guy isn't that bad. He's got so many opportunities that he's okay with walking away rather than
that's the other
palm.
thing. I started dating like 3-4 girls at a time. Like as I got older, I realized, and the minute I started to get more money in my pocket, I was just like, why am I treating my girl like dating one at a time? Like this is not how it works. I started dating like 3 girls at a time. And I remember one time, and this is the funny story with me and the wife. I was actually on a date with another girl, and my wife, I mean, she wasn't my wife at the time, she was my girlfriend at the time. Well, she wasn't even my girlfriend. She was a girl that I was dating. So basically he was on the roster, right?
Yeah.
So I was on a date with another girl who, we were having a good time at dinner or whatever. And then this one called, and I told you, like, I picked up the call and I started speaking to this one while I was on a dinner date with her. And then like I hung up, right? And she's like, you can't be serious. You just like picked up a call. Like you couldn't, like, what is wrong with you? Blah, blah, blah. I'm like, listen, I just had to pick it up. I'm sorry. Me and her are just really doing well. And you would think that the reaction would be take me home right now and, call it a day. It's like, nah, it's like, I need to get that. And so she did her part to try to get more. And I was just like, sorry. I was like, this one's way better. I like her. And so I ended up marrying her. Damn. Yay for me. I'm just antagonizing her because I know she's on here listening.
Oh god! Hey, she won. You won the trophy.
Yeah. The other time,
she's a trophy too, though. She's a trophy too.
I remember I was, I think it was like a year into my relationship, a year and a half. I remember one time I get a call. No, I think this was like right after I think me and my wife got married. So I got a call from like an ex. And she just happened to call, and she was like, hey, how's it going? What are you up to? I'm like, oh, I'm just sitting here with the wife watching a movie. And I'm guessing that she tried to like see like what is Chris up to these days and blah blah blah. And, she's like, oh my god,
Drop
I'm
the
so happy
wife.
for you.
Yeah.
I'm so happy for you. I was like, nah, bitch, I'm gonna drop the wife on you.
You lost.
Yeah,
Yeah,
yeah.
she probably felt it out there. Probably cried herself to sleep knowing that she missed
Nah,
out on
she's
the Daisy
fine.
gun.
Nah, she's fine, man. She avoided a landmine. The one I have right now, she loves this landmine, so she's fine with it.
There you
You
go.
know.
There you go.
Yeah.
So what with everything else that's going on, I mean, other than Google, I mean, have you really been picking up any other positions, or is that mostly just what you've been sniping on at the moment?
Yeah, let me actually, you know what? You will love this company. It is the perfect dividend play combined with capital appreciation play,
Hmm.
and it is a long-term play and you'll love it, okay? Um have you heard of Crown Castle before? Crown Castle
Yes,
Holdings.
but that's a real
You
estate
have?
investment trust. Yeah.
Holy shit, it finally has
Is it
gotten to the point where
CCI?
now,
Is
yeah,
that what it is?
CCI, that makes absolute sense now, dude.
I
Take a
don't know if their
look.
headquarters is here because I drive by a big building called Crown Castle. Let me see. Oh, it is Houston. Okay. Yeah, I drive by
Yeah.
their headquarters every day on my way to work.
So for those of you, I will try to do some on live DD for everyone. Actually, let me share this other screen. Da, 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 da. Okay, Crown Castle Holdings. Okay, Crown Castle Holdings is a REIT, but what they specialize in is something that is actually very unique. They own a lot of towers around the United States. So whenever you pass by, you see these cell phone towers around, like these giant ones. These guys own a lot of those towers. Now, the equipment that's usually on top of those towers, they're owned by the wireless
Telephone companies.
providers.
Yeah.
Yeah, like telephone companies like Verizon Wireless, T-Mobile, Sprint, et cetera, et cetera, et cetera. So basically what they do is they buy the land around the tower, or they lease out the land with long-term leases going probably 99 years, and then they build these giant towers, and then they lease out the space up there. On top of that, they have a lot of fiber assets. So they have almost 85,000 miles of fiber optic cable that's connecting these towers to the country, and basically to all the infrastructure around, right? So if you look at how cities function, usually there's three layers of connectivity. Number one is you have your like wideband stuff that's going to be loaded on these giant towers, right? So these things stretch hundreds of miles, not hundreds, I should probably say like miles in either direction. So that's where you get internet connection and 4G connectivity. But then you also have 5G connectivity, which is a little bit more in the lower band space, but it spreads higher amounts of data. So in order for you to enable that to work, you kind of need to be a little bit closer to the city centers. So that's where you need something like small cells come in. And so they own a lot of small cells all over the country. So if you see here, this is the perfect example. If you only have towers, what's going to happen is when you have a lot of network traffic, you're going to have some people on it and they're going to have a good experience. Some people are going to get capped out with their bandwidth, and they're going to have like really shitty times on the phone and on the internet and everything else. So in order to mitigate that, what they need to do is make sure that they have multiple broad like wireless antennas around. So you've got one tower here, and you've got a capacity right here with that small tower capacity, that additional capacity. So what's happening is as more and more people become, use the internet and also on their phone and use more services, you need to have something called densification happen, right? So as the population centers grow and also the bandwidth grows, you need to add more towers in order to maintain that capacity. So these guys, what they do is they build out this infrastructure where they own the power lines, and they actually not the fiber optic lines, and they also own the small cell towers that are usually located on power lines, on light poles, and even on just independent poles. and they're able to negotiate contracts with these carriers and provide long-term value for them. And this is a great business because all they're doing is literally just renting out space on there. Now, what's awesome about it is that over time you get something called a waterfall effect, right? Where basically every year they have like built-in contracts where they have escalators. You see this right here, per annum escalator. So they escalate the cost every year by 3%. So if they, in the first year they were charging, let's say, I don't know, $1,000 a month, the year after that they would charge 1,003, and then the year after that 1,006, after that is 1,009. So but it's cumulative. So that growth has led to a significant amount of growth for them over the course of the last 20 years. So if you look at in the year 2000, they were generating um, positive about $101 million a year. That over time has constantly grown all the way now to almost $2.8 billion per year in cash flow, right? Now, at the same time, you look at the amount of capital that they've actually invested. This is the money that, as a REIT, you have to take the money that you get, portion of it you pay out to your shareholders as in the form of a dividend, but other part of it you use as capex, right? And so that capex has been pretty much fueled by a lot of debt issuances. Now, over the last year, because of the Fed's interest rate hikes, a lot of people really there's like, oh my God, these guys have so much debt on their balance sheet. Sell, sell, sell. And what they don't realize is that this company has actually done a really good job of spreading their debt out very far into the future. So their average debt life went from 5.4 years to almost 7.9 years into the future. The average cost is only 3.8%, and most of it's actually at fixed percent. So out of the debt that they have here, 87% of it is fixed debt. So right here, you can see these are the maturities that they have. So overall, they have a pretty good balance sheet in terms of like maturities. So all we really have to do now is just chill and at the same time collect some of the returns from their cash flows. And if you look at their share price, Matt, this is the thing that's crazy.
50% down, yeah.
Yeah.
Chris always does it. Yeah, it's 50% down compared to where it was. And I think one of the things that I'm trying to look up personally on Crown Castle is I'm trying to look up specifically what the cash flow from operations are, because that's generally speaking, or adjusted funds from operations for Crown Castle, because that's generally speaking what's important when you come to investing in some REITs is what's the price to adjusted funds from operation. So I'm curious if you have that offhand or not. But I guess you have that 2.8 billion, right? So they're 41 billion divided by 2.8. They're trading at about a price to funds from operations of like 14, 15.
Yeah, let me pull up their AFFO actually. Let me just get that for you. Yeah. So this is the great time where there's a lot of companies that have been oversold, and because of this oversold market, it's not a bad time to really pick some stuff up that's on the cheap.
And the thought is, I think, with some of this is that they'll either have to slow down how quickly they're issuing debt to basically be able to progress forward, to they'll, over the next 2 to 3 years of the debt that you kind of saw, they'll have to reissue at higher prices, which means, from a funds from operation business, it might challenge the amount of money that they can give in terms of like distributions and stuff like that. So I think that's what maybe some people are fearing. But I'd say, the amount that it's gone down by, a price to cash from operations, I guess it all just depends on how quickly that's growing per share comparatively, because that's an important metric. If the AFFO is growing at say 12% or something a year, coupled with the debt, coupled with the shares that they're kind of laying out, then that's something that's probably okay to invest in. And I saw somebody, they might have deleted the comment, but they said that they wouldn't touch it above $90. But it's one of those things where if you're investing in it for a dividend or you're investing it for, long-term price appreciation, this could be something that if it continues to grow, which we're going to be more and more into the world of 5G and wireless, then this is something that is probably prudent to look at. Were you going to share something or?
Yeah, I was looking for
Okay.
their AFFO
Okay.
historically, but I couldn't find it. So I just have their last earnings. So to put that up there. So their AFFO right now, Matt, is about $7.63, and it's still growing at a roughly like 3% growth rate
Okay.
from their thing. So yeah, like I said, they're in a good shape. The one thing that they do have negatively that's working against them this year is that they had a lot of contracts with Sprint. And Sprint and T-Mobile, as you know, merged together, which meant that a lot of that spectrum kind of, it's redundant now. So you don't need as many contracts. So they do have some runoff with regards to their contracts with that. So those are long-term contracts. They're going to get terminated early. They'll get a breakup fee for it, but that means that that's future revenue that's not there. But in my opinion, their growth by expanding out will make up for the loss of that client. So it's not a nearly a big deal or a headwind. So right now, I think Crown Castle is a very appealing company to buy as long as they can maintain that dividend. You just get weather. Yeah, 50% drawdown on a company like this that has, tremendous value going forward. Definitely the one I'd want to be in.
Yeah, it's definitely one I'd always assumed it was real estate. It like more like commercial or residential. I didn't really realize that it was actually like the towers and stuff, which is cool to see. Somebody mentioned Main Street Capital in the chat. They were talking about real estate investment trust, and Main Street Capital would be a good one. Main Street Capital, for those of you guys who don't actually know, I used to invest in this company and I sold it probably in 2020, 2021 when it got to like $40 or so. And it's kind of been hovering around that 40 to 45 range for some time. But it's actually a business development company, not a real estate investment trust. But they from a tax perspective, they get treated differently, treated very similarly, where they have to distribute about 90% of their net income back to the shareholder. Otherwise, they have to pay taxes. And so it's basically taxed at the individual owner level rather than the actual corporate level. But why I wanted to bring this up is this is a different kind of thought. Normally, when we talk about things like that are REITs or something like that, we talk about it that are, they're investing in real estate. Main Street Capital is a business development company, so they're investing in small mezzanine loans and things like that to help generate income. And I haven't done too much research on this, but I keep hearing this one come around. And I think the main reason it does is for one reason and one reason only. And generally in speaking, when I invested in the company in the past, I always have this, which is the monthly dividend chart that kind of comes into play and where they're kind of trailing. And so you can kind of see the monthly dividends, which is this gray bars. What they used to do, believe it or not, is they actually used to pay a special dividend twice a year. So they actually used to pay 14 times a year. Now they just pay the 12 times a year, which is actually pretty cool. But I think they got rid of those special dividends. But you can kind of see what they're basically doing is just consistently going up and to the right in terms of their share distributions, and have done pretty well with it, believe it or not. And I think the thing that a lot of people are scared about with this one is obviously to take and continue to, let me see if I can find a good chart here. But basically what they're doing is they have a bunch of assets on their books and they distribute it amongst a bunch of different people and give out the loans to small businesses, and they make money on the loans, whether they're loaning them out at 7%, 10%, 12%. And instead of these people going to banks, they're basically buying into some of these companies and lending them out money. And so I think it's just an interesting one to look at. I haven't done too much due diligence on it. I suggest some people take a quick look and see if it's something that might be right for them. But it's pretty cool in terms of the different businesses that they kind of have. Here's all the different sectors and industries that they put money into. As you can see, it's pretty well diversified, with the largest one kind of being internet services, machinery. But it's a different way to look at it. I mean, in all reality, all that all these companies are trying to do is just distribute money and get money
Mhm.
back in yield and return. Some people do it through real estate. Some people like Warren Buffett do it through investing in stocks. Some people like Main Street Capital do it by investing in mezzanine loans and just loaning out
Yeah.
money to other people. Banks do it by taking your money and having a place to store it and then yielding it out to other people, but making sure they keep 7 to 9% of it on the books so that they, don't get in trouble with the Fed. So all these people, they're all just kind of doing the same thing. But I wanted to bring that one up because it was mentioned in the chat. It's not a real estate investment trust; it's a business development company.
Yeah. No, it's very interesting. There's a, can you compare CCI with AMT? So CCI is concentrated in the US, which to some people, that means that they're limiting themselves from future growth. Me, I think that the whole densification thing is a great value for me. AMT, on the other hand, which is American Tower, they do something very similar, but they have a much bigger international presence. They were up today too. They were up pretty good. The thing with AMT though is because that international exposure, I feel like that might be a little bit more of a risk. But I think that why not buy both? Like everyone's always like, "Oh, why are you buying Pepsi and you're not buying Coke? Or why are you buying Coke and not Pepsi?" To hell with it, buy both. They both did well. Whether you bought Pepsi or you bought Coke over the last 20 years, you both had really good returns. So I say split the difference, buy AMT and buy CCI. You know, just
Yeah.
I'm bullish on the 5G trend. That's like one of the trends that I'm chasing right now, because I see the potential for 5G home internet just becoming massive, where everyone just, instead of having to get, this cable internet that you have to call a cable guy, or you have to plug a box into another box, and that nonsense, or FiOS where they have to drill a hole into your home to get the stupid thing into your home. Bro, right now you want the internet, you call Verizon or you call T-Mobile, they send you a box. It's got the mobile 5G internet in there, you plug it into your router, boom, you're good to go within like 10 minutes.
So there's no
I
more cables that you have to hook in
Nope,
and stuff of the like. Because I'm
nothing.
curious, because I went through that process because like right now I have to connect to a cable, like a white box that's within my closet, my walk-in, and I'm gonna be handing that back as I move into the new place. And the guy was walking through for inspection, and I was just like, all right. So I was like, where's the cable box and like all that stuff? He's just like, it's here if you want to go that route. He's like, that's what this like. They actually had it like if people want to pull it through, they had it like set up so that way if they want to set it up, they have like the wire so that they can like pull it through. He's like, but normally it's like people these days are just putting it in the wireless stuff. It's like, and you just get sent the box. I was like, kind of like curious. And so now
Mhm.
I'm kind of curious with my house. It's a brand new home, kind of just
Yeah.
built. I'm just curious what's going to end up happening with that if I end up having to have some sort of wires brought in, or if I could just do the wireless. So we'll see. I'll keep you posted on that.
I would say go to Verizon. Like, who do you have for your cell phone provider?
Cell phone is Verizon. Yeah.
So Verizon is one of the ones that have the 5G internet. So let me just show you what it looks like real quick. Believe it
Because
or not,
right now
Verizon just yeah.
my Ethernet, sorry, my internet is AT&T, so I'll
Okay.
probably get switched off from that.
So if you look at Verizon right now for like home internet, you have to check for availability, because you have to make sure that the cell phone towers are available for you. So, but essentially it's super cheap, especially when you combine it with
Phone.
what is that thing with the phone? It's awesome. And dude, there's literally no downtime.
Hmm.
And it's so fast. Like, let me just run a speed test right now and just show you guys what it comes to, right?
Which is kind of sad, right? Because like 10, 15 years ago, they spent all this money
Yeah.
putting in shit for FiOS, like the fiber optic
Mhm.
cables, and it's like now all that's kind of like
Yeah.
obsolete, which is kind of sad.
Even with my wife like streaming right now on her end, me streaming with the thing right now here, right? I've routinely got almost like, look at this. 128 megs this way, 24 this way. In Atlanta, of course, and the latency is only like 25 milliseconds. You know,
It's pretty good.
yeah, I'm telling you, try it out. It's much cheaper than your cable. Very low maintenance. Just try it, and it'll be like an experiment to see, like,
Yeah, yeah, yeah.
okay, I see what this is like. And
What
if it doesn't work out for you, get
do you have to
fires.
have like boosters and stuff, or is it just
No,
like a no?
no,
Okay.
just the box. It even comes with its own router built in if the place is not big. You can hook it up to like right now. I have like an Amazon Eero setup, Amazon Eero 6. So basically, I have my main router that's in my living room, and then I have like two extenders, one in my first bedroom, another one in my other bedroom, because like my apartment is really wide. But that's because like I need that wideness. But
Mhm.
overall, it's super, super easy, man. Super
Mm.
easy. Yeah.
How much does it cost if you don't mind us asking?
For $40 a month.
Okay, that's about what I pay now. So that's
Yeah.
I think I pay
Yeah.
like 40, 45,
Yeah.
something like that.
Yeah. Like I said, they have, if you have your cell phone with them, but just got to make sure that you have availability, you know. So if they have availability in your area, try it out. See what
Cool.
you think about it. And it's like I said, to me, the simplicity, the ease of it, it's just, and in terms of profitability for the internet service providers, it's going to be massive,
Mm.
massive. Yeah.
Uh question. So the 10 years kind of going in the other way. Do you think that that is going to persist, and do you think that um now would be an appropriate time to like gamble on something like a TLT, or do you just say stay away from it because who the hell knows what's actually going to happen with the FOMC next week, and um, you just don't want to touch it with a 10-foot pole. There's easier things
Mm,
to look at.
I'm, you know what? This is going to sound bad, but I can't tell you what's going to happen in the next couple of months, but I can tell you what's going to happen a couple of years from now, which usually is the opposite, right? Usually you can tell what's closer to you than what's further away. But from what I can see, I think in the short term, we could have this small interest rate spike, primary, like with the Fed rising just a little bit more, just to be on the cautious side and just be a little bit more conservative. But long term, the rates are going to go down. I think we've got all the signs of disinflation starting to make their way into the economy. Commodity prices are down, a lot of things are down. So overall, I think that's why the 10 years starting to like go down as well, because the market is realizing that, hey, maybe we don't have to go much further in terms of rate hikes. And so the market, being that it's a forward looking system, is going to act earlier than everyone else. So right now, I think there's a lot of bullishness, and TLT is probably going to do well. But
Do you th-
in my opinion, I would rather go with companies rather than the treasuries for
Mm,
now, only
mm,
because companies right now, you can analyze and you can figure out what the cost of capital is going to be, and then you can
mhm,
base your cash flows and everything else. So it's a much easier value proposition in your brain to do that arithmetic than to figure out what is the Fed going to do and when are they going to do it, and
and the
if they
pivot,
do
yeah.
this, then that's going to happen. And then you're relying on speculators in the market to drive the price of treasuries up and down,
Mhm.
versus a company where it's like, oh, this company is clearly oversold. At the minimum, it should be worth this much. At the maximum, it should be worth this much. And then you could base your strategy around that, you know.
Mm. So my thought process is crap. I just kind of had it. Uh, yeah. So the Fed is operating off of data that's a couple months behind. We already kind of know that. And do you think that with student loans kind of coming back, it's going to exacerbate the situation? People are now going to have a couple $100 less a month to spend because
Yeah.
now they kind of have this other, um, drag on their earnings kind of coming forward. So that's going to even hinder, the month to month. You think about it. I don't know how many people have student loans in the United States. Let's just say it's 50 million people, but each of those people has to spend an extra $100 a month, or let's just say $200 a month. That's going to be a pretty large sum of money. It's going to be billions upon billions of dollars every single month that people are no longer spending, which is obviously going to find its way flowing through the economy, right? I mean, just from a simple math perspective, you could say that it's about $1 billion worth, at least at a minimum a month, probably more so than that, uh, coupled with probably doing it 12 months out of the year. So it's going to be at least 10 to 20 billion dollars that's not going to be spent now because people have all these loans that they have to pay.
Yeah. TJ asked a really good question. What's the difference between, disinflation and deflation? So if you look at inflation, everyone knows that the price of things go up. Disinflation is the prices of things don't go up by that much. And the last but not least, things are going down in price, right? So right now, if let's say in year one you took up, I don't know, a cheeseburger, if it was worth $1, the year after that it was worth $2. That means that inflation went up by 100% because it went from 100 to, it went from $1 to $2. Now, what if in year three it goes up to $3? Well, you would think that, oh, that means that inflation is really high. That's technically not the case because it's actually disinflation. Because what just happened was the first year went from 1 to 2, which means that it went up by 100%. The second year, it went from 2 to 3. So technically speaking, that's only a 50% rise, right? So that's disinflation that's happening. And then the year after that, if it goes to $4, right, seems expensive. But if you think about it, if it only cost $3 and it only went up by $1, that means that it only went up by 30%. So you see, the first time it went up by 100%. The second time it went up by 50%. The third time it went up by, 33%. So that's the thing with how disinflation works. And disinflation is what the Fed is looking for right now, but they don't want it at the small level. They want it at a lot of level. Deflation is bad. Deflation means the price of things go down. So I mean, some people and some consumers may celebrate saying, "Yay, deflation," but deflation is bad for the economy because that means that the price at which you are selling may not be at the price that you're actually manufacturing. And so that can drive the economy really, really down,
Yeah.
So if you look at here, there was some really great changes in terms of core inflation on a PCE level. So you can see here, this is not deflation, this is disinflation because things are still going up. You can see the percent change went from almost 5-6% of things going higher and higher to now going and only going up by 2% per year. The Fed's goal is to get down to 2.5%. And that's pretty much the key that we're looking for. So when I did my analysis on a forward basis, you can see here last year, the monthly change to core PCE was almost 0.4% on a monthly basis. That slowed down to a trickle to only about 0.1%. So if you go on a forward basis, that means that the core PCE is actually going down, which is a good sign. And if you annualize it out like 3 months in a row, you can see that it's actually right at the targets that the Fed is looking for. So, a lot of it is just, we're headed in the right direction, basically.
Yeah, I'm just looking. I'm trying to pull up specifically the numbers that are kind of behind CPI and trying to figure out what parts of CPI are actually going to be the part that puts us into deflation, right?
Energy sucks, dude. Well, energy is going to be inflationary for us right now.
Right now it is. I mean, comparatively to the
Yeah.
last 12 months, it's starting to go up and kind of to the right? I think last year this time oil prices were at 70 to 80 bucks. And so, them going into the 90s in the third quarter of this year,
I would
probably
say,
screwed us a little bit.
I'll tell you exactly what's going to cause us to go into disinflation and maybe possibly even deflation. Housing is the camel that's going to, like, the straw that's going to break the camel's back, primarily in rental housing. So if you see how much rental housing's been under construction over the last couple of years, and then on top of it, the growth in rents has gone down significantly. So let me just pull up the data.
To put it in perspective, last year, so I went to the rental, my landlord, basically to say, hey, I'm leaving. They're like, you sure? Like, what can we do to get you to stay? Like, we'll have really good incentives to stay. Last year, I tried doing the same. I think they actually offered me lower price. I think it was the $300 cut if I was to stay comparatively to to last year, because I was just like, I'm leaving, like I'm going. They're like, oh, like if it's like a matter of price, like we can get you like, and I was like, oh shit, because last year I went from whatever it was, and then they increased it to what it is, which was like a $300 increase, and then this year they were like, we'll do a $300 decrease in the amount you're gonna have to pay. I was like, no, it's not the reason why I'm leaving, but but I'm leaving for other reasons. But I've seen that elsewhere as well. A lot of places are starting to offer those 2-month free, 8-week free sort of stuff again. Whereas last year when I was looking, everyone was so damn competitive. And it was like when you tried to go into a leasing office, they're like, no, you have to book like 3 weeks in advance. And I was like, what the fuck is this? Like, it didn't make any sense. It was just like, it was like out of a dream world. I was like, I'm literally trying to give you money and rent from you and give you like 20 to 30 grand a year. And you're like avoiding me. Like it didn't make any sense. Versus now I'm seeing a lot more people, I guess, being willing to move the price.
Yeah. So if you look at this, last year, the price of rented dwellings in terms of inflation was about 8% year over year of growth in rents. This year, going on a forward basis, it's negative 0.5. That means it's flat from October to last October. So whatever your rent was last October is probably what you're gonna be expected, like on a median basis, to be paying right now. And it's going to depend on your region, of course. So I know that there's going to be regions that have like just a lot of people moving in and the price of rent is going to go sky high there. But overall, the rate at which rent is growing is diminishing materially. And actually, in some parts of the country, it's actually going negative. So this, I think, is going to be a big driver. On the other hand, because of the low inventory of housing appreciation last year was about 13% year over year. This year, it's about 3.75%, or actually it's owned dwellings like 4.75%.
So that's disinflation. But do you honestly think that housing will, in the short term, go negative?
I think it's going to be very region dependent. Depending on where you live, I think there are certain regions where just people are just moving to. Like Texas is just growing. They have they've got good policies on people moving in because of their low income tax rate, business friendly environment. A lot of businesses are being set up there, so there's more opportunity, so people are going to be moving there. So I think for Texas it's fine. On the other hand, if you look at San Francisco and if you look at the West Coast, they're not doing so well. They're actually, the price of homes in the West Coast are actually going down in price. I don't know if you know that. So it's one of those things, man. Same
I haven't really been
Seattle.
looking at. I haven't been really looking at home prices per se, but I know San Fran with commercial real estate's been a huge problem, and I know a lot of people have been exodusing, especially during the pandemic. A lot of people were moving out of California to Texas, and I think that was a lot of the reason why some places like Austin and several other places in Texas, including Houston to a bit, we're seeing such large increases in prices. But like you said, I think a lot of people, I know some people like famous YouTubers and stuff that moved from California to Texas, and they've actually moved back. And I don't know if it's just because, some people just don't like Texas. I don't know what it is. They just love California, but there's some people that just absolutely hate it. Right. So there's, different strokes for different folks, but I can understand where you're kind of coming from. The places that saw a lot of mass influx of people, Idaho, Austin, a lot of people are unfortunately having to leave those areas. And so either because there's just not jobs, the cost of living has gotten too high, they're moving back, unfortunately, to where they came from, stuff like that, where you're actually starting to see 20-30% decreases in some of those homes. And I've seen that a little bit here in Houston. Some areas will experience much larger drops, but then there's the high areas where there's a lot of people looking that are more suburban, have better schools. Those places are still maintaining their superiority in terms of price power and price holding. And some have come down slightly, but I think it's not like it's more of like a normalization rather than a price decrease, right? Because places might have been selling for crazy prices when they were available because of the supply shortage. And now that there's higher interest rates, things and prices have been somewhat subdued, but you're not seeing like a huge decline in a lot of the higher demand areas within Houston.
Yeah. Even places in California, like let's say we're looking at LA County, right? You can see here that like a 5-year trend has it went from like 1.7 thousand in Los Angeles to like 1.9 now. So you saw there was a huge bump post COVID, but you see right here that small dip. So you can see here that's the price of things like deflating a little bit, right? Burbank is the same thing, it's going down slightly. Glendale, it's the same thing. It's kind of flatlining right here. Long Beach is going down a little bit. So, but at the same time, if you look at like Torrance, Santa Monica, things are kind of just evened out. So this is the thing about like regional housing. No matter where you go, you're going to see different changes. The crazy thing is though, people are just buying up homes, man. Look at this. 5 years ago in Los Angeles, you could have bought a home for 684K. Now that same home is almost $900,000. Acting like but you know what though, Matt? To be honest with you, I think this is where the disconnect lies. You know, you look at some of these places, it's just nuts, dude. The rise in prices of homes.
You
So I
started to
think
see
there's yeah.
you saw that little dip 6 months ago from the chart that you were
Mhm.
just showing right before you turned it
Yeah.
off, and you're
Yeah.
starting to see it actually move in the opposite direction again, where it's going to
Yeah.
go up. And so that's my
Yeah.
thought process is like I don't know if that's going to persist or if that's going to turn back around again once you kind of go into the winter time, because that data also trails, right? I mean, it's always probably a month or two behind because they have to culminate the data and everything the like. So September data for a lot of those guys is probably just coming out if it hasn't just come out for that. So is that going to see a
Yeah.
slowdown now that school year has started and generally that's slower for real estate? I don't know. So I'm kind of curious what ends up
Here's
happening with some of
here's
these
here's
guys.
one thing I'll never understand. People would rather be homeless in LA than like middle class in like Iowa. You know what I
Yeah.
mean? I don't know what is up with that. Like, if you can't live in a certain area, move. Go where the opportunities are. That's like the practical thing to do. I know there's a guy who's homeless. They're like, "Why are you homeless?" I go, "I can't afford to live anywhere." But it's like, "Have you considered moving out of the state?" Like, "No, I just love the weather too much." And I was just like, this guy would rather live in a tent in California than move somewhere else and like make a living. Like, it's mind-boggling to think that that is where we are in the world, man.
Hmm.
I mean, I don't know. My parents would have just moved. They would have said, "Yeah, let's go. We'll figure out our life somewhere where the cost of living is lower, where we can." And the thing is, like, I get it if you work in like a professional industry that's very localized, but if you're working a minimum wage job and you're like barely getting by, who gives a shit about the weather? You need to move to where you can actually save some money and actually provide yourself a future,
Yeah, I
But I
don't get it.
guess, but I think that's like just me being practical. I don't know.
I don't know. I mean, I moved to where the jobs were for me. I mean, I wanted to do petroleum engineering. I got it, and I moved to where the jobs were. Right. I mean, if I was stuck in Pennsylvania, I probably wouldn't be making as much as a petroleum engineer,
Hmm.
or I would have had to move to the western side of the state. So I was just like, well, I could either live in the Pittsburgh area and make money doing that, or I could go to the big leagues and move to Houston and have a lot more opportunity. And so that's what I did. And
Yeah.
I like Houston a good bit. I can't complain with it, but it's I'm with you. Like unless you have some sort of specialized job that's keeping you in one location, like you need to work in refineries or something of the like. It's like, yeah, but if you're working a job that is very transferable, then I'm
Yeah.
with you. I don't understand it.
I think right now there's so many opportunities, especially in the Midwest. The goal should be to move to the lowest cost area with the best schools for your kids. Like if you can figure those two things out, bro, you will have a great life. You don't need to have a six-figure job. Just don't have six-figure expenses and you're fine. You know, there are parts of the country right now that are really nice parts of like the Midwest. Neighborhoods are amazing, very like the neighbors are really nice. The school districts in that area are amazing. where you can actually afford to live, yet people are like, no, I want to live on the coast. And I'm like, okay, I guess.
If you want to be by the beach, you're gonna pay beach prices. I mean, I don't know what to tell people, but yeah, I mean, a lot of
Hmm.
places that people can move.
TJ's like, you'd be frequenting Jaguars where all the roughnecks hang out.
Yeah, but I mean, are things getting more expensive in Atlanta, or are you not really looking because you're kind of set right now?
Actually, I'm seeing some price declines. You know, the price declines are happening in the periphery, but there's still inventory challenges. So basically, there's just not as many houses on the market as there were historically, and because of that, the pricing on the homes is pretty steady. It's not growing, it's not going up by much like it was like last year. So I see a lot more price declines now than a year ago. Like a year ago, man, if you put your house on the market, you got a bidding war going on.
Yeah,
That's
yeah.
not the case anymore.
And so,
Yeah.
sorry, go ahead. You were gonna
No, I
make
was just
your
saying, I was
point.
reading one of the comments. June, she
Yeah.
wrote, I grew up in Iowa. It was cold as F 6 months of the year. I'm guessing she lives in California now. She's living that
Living that
California dream.
living that sunshine state. Well, I guess that's Florida. But the question I have, I know I asked you a few months ago, but I'm curious now that we're kind of on the topic of real estate. As you see, I mean, I think we're both on the same page. As kind of things unwind at the end of 24, early 25, interest rates and mortgages come slightly cheaper, and also, I guess if the people think that the Fed is going to take their foot off the pedal a little bit, you might see mortgage rates start entering in the high sixes again compared to where we are today. Do you think that that's just going to add fuel to the fire on an already short supply of homes, and that's going to end up increasing prices faster? Or do you think that it's going to be more of like people are going to do it smart, where they're going to only list their homes if they find a place, and so it's going to be very well balanced? I'm just kind of curious if you've kind of stepped away from your thought process, because I think you were in the camp of prices are still going to go up in the next 2 to 3 years for homes, if I remember correctly.
Well, my theory is this in the short term. I think once the Fed starts cutting interest rates, there's going to be a lot of people stepping up and selling their homes that right now they're not selling, primarily because they would be giving up a sweetheart of a deal on their mortgages, right? So right now, if they have a 3% or 4% mortgage, and the prospect of buying a new home means that they have to pay 8% mortgage, they're not likely to sell the home that they already live in, right? It's just not a smart thing to do. So they're waiting. They're not putting a lot of that inventory on the market. You want a healthy market where there's a lot of buyers, but there's also a lot of sellers. And right now, we've got a lot of people just holding on to their homes. And a lot of it, naturally, people are going to need to sell their homes at some point. Death in the families, divorces, you move your job from location A to location B, you need a bigger home because you have more kids, you need less of a home because you have, your kids go to college. All of those factors, they come in and they end up resulting in a certain level of inventory that typically gets put into the market. Then you also have people who are flipping homes, then there's people who are doing Airbnbs. All that inventory absorption typically naturally like keeps and sets the price of homes. The problem is because of the low interest rates that we had during COVID, a lot of people were able to refinance, including myself. Like my mortgage is, I think, like a 2.75 or 2 point something, really low right now. So I have no intention of moving that quickly. Like my monthly, like me and my wife, we looked at it, and our monthly expenses are so low that it makes no sense, because we don't have kids right now to need that bigger home. Eventually, it'll be nice to have a bigger home and everything, but I'm not going to pay 8% on a 30-year mortgage just to live somewhere. And then and especially paying the prices that they want right now, bro. It's like financial insanity to go from what we're paying right now to paying what we would be paying just to say, oh yeah, we have a home now. No, we're more practical than that. So I'm waiting for the prices to correct a little bit in our area, where I think like when interest rates start to come down, you're going to see a lot of inventory come on the market, and a lot of that inventory is going to send prices further down. And I think we'll get some good deals. And on top of it, it just gives us more time to save money, because The goal should be to buy a home without having to take a mortgage at all.
Mhm.
And me and the wife we're well on our way there. Like if I can buy like a nice home and not have a mortgage, bro, that is just one thing off my brain. Imagine right now, every year, the only thing you got to pay is just property taxes, and that's it. Like
Mhm.
how free is that? Like you
You
technically
can take
speaking,
on a lot more risk.
not
Yeah,
only
from an
that, but
investing perspective.
not only that, but one of you guys can quit. You don't have to do a job anymore. Most
Mhm.
people, one person's income out of a dual couple tends to just go towards housing costs. Whether that be housing maintenance, property taxes, mortgage, and everything else. If you can eliminate that, you're basically eliminating one person's need to go to work. Because if you think about it, let's say you make $100,000, right? You're probably going to pay about 25% of that in in taxes. So you're technically going to come away with 75,000. But you're expending so much energy going to work and doing this other shit. Then the cost of actually going to work, right? You have to have a second car. You have to you have to go back and forth. So that is another big factor. And then when you think about it in terms of like a joint, like a couple, right? If you are a married couple and you have only one person income, bro, you will pay almost zero in taxes. Like let's say right now you're a couple that's like making 160,000 a year combined. If you're married and one of you is not working, that means that you'll only make $80,000 a year, right?
Mhm.
But that also means out of that 80,000 with all the deductions and everything else, bro, you won't have any, you barely will pay any
Yeah,
taxes.
barely. Yeah.
It's such
But
a,
but my
yeah, yeah.
question to you is like you also have people on the sideline that are in apartment buildings like myself, and so you also have the people that are kind of waiting on the sidelines that don't already have a home, don't already have equity. So my question is will the supply that is going to be showing up actually going to be enough where it drives home prices down, or is there still going to be enough competition in the homes that are on? And let me rephrase it. Certain homes will probably be up for grabs, so there's going to be a lot of competition. I'm thinking kind of the secondary homes in terms of not secondary mortgages or like vacation homes. I'm talking homes that are kind of in the middle tier. The homes that are probably anywhere between, I would say, 350 to 600,000 are probably going to be very competitive versus
Mhm.
the lower tier homes, the people that are in starter homes, like stuff like that. I feel like those are going to be ones that probably get hit the most because I feel like a lot of people will be selling those off. And there's probably going to be more people leaning towards, well, this is our chance to buy. Let's buy as much as we can rather than taking the stair step route like most people probably have done in the past. But that's just maybe me being naive or being too calculated about it. But I don't really know. But my thought process is I think that there's going to be some tier of homes that are extremely competitive and the supply won't be sufficient. And there's going to be homes that there's way too much supply. In order for them to sell, people are going to have to make them so cheap that they do. And I think that that's going to be the starter homes that are anywhere between, 150 to 350,000.
Yeah. I think it's going to depend on the region, man, because there's certain regions during COVID, people just went and started moving there, and it was just like, oh my god, all these people are moving in, let's build up all these homes. And so those areas just got a lot of housing inventory under construction. And then all of a sudden, people started to get laid off and everything, and or they got told to you have to come back to the office in in whatever area you were primarily working in before. And so now all these people are going to have to leave, and that means that all those homes are going to be on the market. So it's going to be very region specific. Like there are certain regions where there's been a lot of overbuilding. I think those places are going to see a decline in housing prices. The other parts are going to be just fine. They're not, they're very constrained right now, especially in like California. So I don't think there's really that much worry that prices are going to go down like crazy in Cali. But in terms of it's in terms of like decline in prices, it's going to be very regional. I will say one thing though, when it comes down to living, everyone's living situation should be, and this is something that even Shaq, I don't know if you saw this on YouTube. Let me find it real quick. Like the best money advice that people tend to give is live within your means, especially your home. Well, one second.
Are you talking about how Shaq has like a 30,000 square foot house and
Yeah.
had to hire maids and stuff?
Mm-hmm.
Just flush the
Mm-hmm.
toilets.
Yeah. Yeah. Ah, man. Damn it. Where's this thing? Yeah, Shaq bought it right here. Hold on.
Your house.
One second. Share screen. Boom. Right here. Can you see that?
Yeah.
Okay.
Is
Can you hear that?
really
Yep.
big though? I would think you need high ceilings, but do you need it to be as large? Can we show that this is from Google Earth probably? All right, how many square feet is that?
My house is 76,000 square feet
76,000 square feet.
in Orlando, Florida.
Yeah, there it is.
Jesus Christ.
All right, so how long have you lived in that house?
Since 1996.
Oh, a long time.
Yeah, a long time.
So did you build it?
No, I bought it when it was 25,000 square feet. Then I had a 10 bedroom guest house built. Then I had a full court basketball court built.
Okay, so you just kept adding on.
Yes, I just kept adding on.
Okay, so 76,000 square feet. How much of that do you use?
Only 2 rooms.
2 rooms.
2 rooms. The kitchen, because I like to eat, and the bedroom, because I like to sleep.
Right.
That's it.
And
Honestly, that's pretty much what most people do, right? Like
Yep.
they don't need all this extra room. So like I know sometimes people think, hey, it's nice to have like a 6-bedroom home. Bro, you're gonna pay to heat a 6-bedroom home. You're gonna pay to cool a 6-bedroom home. You're gonna pay property taxes on a 6-bedroom home, and you're barely gonna go into 4 of those bedrooms.
Yep.
You know, it's like, oh, where's Aunt Susie gonna stay when she comes to visit? Bro, I don't want Aunt Susie to come visit. Fuck her. You know?
Yeah, no, I hear you. Yeah, I mean that's why I think I eventually landed up on what I got. I got like a 1,500 square foot, maybe it's 1,550, doesn't matter. But I got like a little small place. I'm like, it's just me. Like I just need a nice little seating area. I need a nice bedroom. I care about my bedroom. I want a nice, personal bedroom. I want a closet, a nice personal bathroom. I'm like, I don't need massive secondary bedrooms. Like I think
what's
10 by 12,
important?
10 by 13.
Yeah.
They're small. I mean, don't need.
You know what's more
anything too big.
important, Matt? You know what's more important? And this is something that people really don't take into consideration: the distance to your workplace. I think, and this is something that my dad told me. He's like, you want to be happy, find a place that's close to your job. Most people, they live in these really nice neighborhoods, but they travel almost an hour and some change every day just to go to a job. If you think about it, it takes you an hour to get to work and an hour to come back, that's 2 hours a day. Multiply that by 5, right? That's 10 hours per week. Multiply that by 4. That's 40 hours that you're going to spend
That's
just driving. That's an entire week of work.
That's pretty much what so I live in a high rise now, right? So I park on the 5th floor. I don't know what it is. I just don't like parking near everybody. So the 5th floor, I was like, it's 5. It's easy to remember. So I'll park on the 5th floor. The first 3, 4 levels are completely packed. So the amount of time it takes me to spin around that many times to get to the bottom floor. Then one thing I didn't really notice, it was really cool when I first moved onto the 25th floor of where I live, right? But taking the 5th floor to the 25th floor elevator, 20 floors, waiting for the elevator to show up, it starts adding up to the point where, like in the morning, it's not too big of a deal. It's about 30 to 35 minutes from door to seat. Maybe if I get coffee, it'll be 40 minutes from my front door to getting my seat in my desk at work. Which also I work on the 16th floor of a high rise too, right? So that takes time going up and down elevators itself. But then I realized on the way home, traffic is awful. So sometimes it'll be an hour and a half. And so you think about it, it's just like I start my new house is on my way to and from work. And every time I'm like, as soon as I start getting bored of driving, I'm like, I'd be getting off at this exit right now. And I'd be pretty much home. And I'm like, the thing that's nice is it's probably going to cut down my commute at least 10 minutes in the morning, maybe 15. The amount it's going to cut down my evenings, though, is just going to be astronomical because I hit 2 layers of traffic going around Houston. There's several loops around Houston that help get around. There's a line of traffic as soon as I hit one, and then as soon as I pass that one, there's another one as soon as I get close to downtown, and that's where the majority of my time gets eaten up. And so that I think will probably save me at least half an hour, if not 40 minutes in the evenings. And I'm probably gonna have so much more free time that I won't even know what to do with. Not only that, but like I could go home for lunch if I honestly wanted to. It might not be an extensive lunch. Like say if I wanted to take like an hour and a half lunch, I'd probably be able to be home for 30 to 45 minutes. And like if I had a dog, I'd be actually able to have a dog rather than, but it like you said, I noticed that a lot of people will live so far away, but a lot of times they do it for their families. A lot of times they do it to get into the appropriate schools that they want. And so yeah, I mean, but I hear you though. And I think it allows people in these days when they only have to go in the office 3 days a week or even work remote, to do those things. But not everyone has that ability. Some people still have to go in 5 days a week.
Yeah. I've been reading this book about like how rich people live and like some of the secrets to the wealthy, like some of the things that you and me would take like, oh, wealthy people, they would do this and they would do that. And it got me thinking, like, so in New York City, all the wealthy people, they live in condominiums, right? And here in the city. Now, I asked myself, like, wait a second, why are they all living in condos? Why don't they like live in the suburbs and buy these giant houses? Like, wouldn't that make more sense? That's what wealthy people do, right? It's like, no, that's what rich people do, or at least they want to feel rich. Wealthy people, they have multiple condos in multiple cities. And this is something that they just, if you live in a condo, you get built-in security, right? You've got concierge where they take care of all the stuff that you need, right? There's when you leave the area and you go like travel for 6 months, you have nothing to worry about. Everything is taken care of, right? The condo and everything else is paid for. Dude, condos are the best way to go if you're wealthy and you want to live like a jet-setting lifestyle.
Right.
So that's like one of those things I never really realized. And they're like, why would I want to buy a house if I'm not planning on spending most of my gear at this house?
Yeah.
Like, it's just, I'm going to have to worry about it constantly. Like, what if someone breaks in? What if someone destroys something? So most wealthy people that don't have kids or those, they live very like frugal lives. But what they do is they spend money on the experiences. Right. And that's the thing that like I want to do in the future too, which is I want to use my wealth to actually live life and do stuff that I don't have to like take time out of my day-to-day existence. Like, it would suck to have to mow my own lawn, do my own like gardening and all this other shit. Like or pay someone to do it. Maybe I don't want a yard. Maybe I just want to live in a nice high rise, like in the middle of Atlanta overlooking the city. I spoke to my wife about it. So I'm not even sure we want to be in a house, but we'll see.
I think, I mean, it's pluses and minuses, right? I mean, I like what I'm doing, but and I didn't really have to be honest, when things were doing really, really well and I didn't have to leave the apartment, like during COVID, it was actually really nice because I didn't have to go into the office. And so I had so much more free time. I would actually be able to go to the gym. I was actually losing weight. I was eating healthy. I would grill every day. So instead of like ordering food and having it delivered while I'm working, I would like actually be grilling. Like as soon as I had a routine, man. It was like get my morning emails done and then figure out that in like certain days I knew exactly what I needed to do. The job that I had was really like very scheduled. And then basically I had in between those non-scheduled times that I had to be in meetings and stuff like the like, I could do whatever the hell I wanted. And so what I would do, I'd get all my meat and chicken and burger meat and steak meat, all from Costco. My freezer was filled with all that. As soon as I was done working out, I'd go to the grill, turn the grill up, come upstairs, get everything prepared, shower. Once I was done showering, take all the stuff that I needed to grill, go back down to the grill, heat it up, come upstairs, eat lunch, finish the rest of my workday. And it was like clockwork. And it was great. And then I started going back to work and I got back to having to juggle too much, and unfortunately I fell into bad habits. I'm not working out anymore. I'm not eating as well as I was. So it's like that extra commute piece and having to go into the office really knocked and I think some of it's me as well, right? Some of this is me not being in the right frame of mind, and I can find time if I really wanted to, but
Yeah.
I think it's that sort of thing where, if you find the right style for you, it can really be a changer on your life.
Yeah.
Anyway.
Yeah. Yeah. So Cashflow Chronicles isn't just about making cash flow. It's about saving cash flow,
True.
So, yep.
But I would think about it, and I know it's exactly what you're talking about. A lot of celebrities, they have a home base, and then if they
Yep.
travel to places, like they'll have a condo in New York, they'll have a condo in London, or I guess a flat in London, and that's it. If they travel to those places frequently, so they can stay there, then they can go home, and then they might live in Florida, or they might live in LA or something like that. But they always have their little spots that they can stop off at.
Yeah.
Some
For me and
thoughts.
me and the wife, I told her, I was like, look, as long as we can get like about 20K a month in passive income, we good. Like once we're at 20K in passive income, we'll spend about 10 to 15 of that blowing it on random dumb shit. The
Yeah.
other 5 will go right back into reinvesting again. And if we ever need to dip into that other 5, we can dip into it, let it compound over time and just chill. Like I know how to make between 7 and 12% return per year without doing work. So
Yeah.
once we get to that net worth, bro, I'm not trying to have all sorts of liabilities. A house is a liability, cars are liabilities. I'm trying to live a very simple life. Just go with the wife and enjoy, bro.
You wouldn't, let me ask a silly question, because I've thought about doing this. I almost did it in 2021 when I was literally and I'm glad I didn't, because things came soon to a halt in 2022. But like probably most people, I was literally printing money in the market in 2021 when everything in the Fed was just literally pumping trillions of dollars in. And I thought I could do no wrong, because I couldn't at that time. You just sell a put and like 2 days later you buy it back for 50%, and you're like, holy shit, I made 15 grand in options this month. Like it's crazy. The exact opposite happened in 2022. So don't get ahead of yourselves. But regardless, it's like when you have that sort of like godlike feeling, do you ever feel like, because one of the things I did in 2021, going back to that, was I almost was just like, F 9 to 5, I'm just going to buy a place in Thailand, live there for a few years, stack all my paper, do YouTube full time, and then, buy a few places around the world, and then just travel to places. And if people want to meet up with me while I'm there, feel free, or I was going to rent them out when I'm not there. I mean, do you ever have an inkling or a hunch to do something like that? Or do you think that that's just going to add too much liability, extra effort, risk, and stuff like that to your day-to-day, that you'd just be like, it's not worth it. If I'm going to go somewhere, I'll just rent for a couple $1,000s and then leave?
Well, I think for me, the first thing is getting the investment part right. Making sure that I protect the nest egg, right? Which means that only investing in secure, safe things that are not going to go down in price significantly, because the last thing you want to do is be in your retirement mode and seeing your prices your portfolio fluctuate 100,000 this way, 100,000 that way. So you need stable companies that are generating good returns, and you need to do it in a way that's truly passive, where it takes little to no effort. So things like REITs, REITs are a good way of doing it. Especially right now with the REIT prices the way they are, it's amazing. So times like this are good to buy some REITs, buy some companies that do some capital appreciation, that are constantly growing, and then the rest of it just put in the S&P 500. So first it's just structuring the portfolio to weather the storm. Once you get past that, then it goes into other things that you would do, right? So I think it would depend on my wife, to be honest with you. I'd like to say that I would love to live in Thailand, or I'd love to live in a low cost thing, but my wife has to feel comfortable doing all that stuff with me, because I mean, bro, I'm not gonna, at this point, I'm too invested in her emotionally, so I can't leave her behind. Though there are times where I do want to just be like, get your ass out of here. That's it. If you weren't around in my life, I'd have, dude, you know how much my wedding cost? Bro, I would have an
Indian weddings aren't cheap, man.
Bro, I'd have
especially a Patel wedding.
Right, bro,
Patel weddings are not cheap.
Yo, my wife is expensive, dude. Let me tell you, man. I was net positive before I got into this relationship. Now I'm in a net. No, I'm just kidding. I'm positive, honey. We're positive.
We're positive. But that's a thought I always kind of have. But another thing, I'll leave it on this, is like, a lot of people are all about dividends, right? And some people might unfortunately, and I got into this trap, and I'll, if you want to go down this rabbit hole, we can, or we can finish another day. But like, it got to the point where it's almost like trading options, or like selling options, where you can kind of see the amount of income that's going to be coming in on an annualized basis. So you keep slowly creeping up your dividend yield over time. And that's a fight, right? Because to me, my thought process is like, okay, I don't want to ever get to a place where my dividend yield is over 4 or 5% on the entirety of the portfolio. That's just way too much. And my thought process was like, always get to a point where you can deal with a 1.5 to 2% yielding portfolio, because that's going to help you sleep better at night. And it's also probably going to get to a point where your growth is probably not hindered onto the upside, because you invest in some of these things like Altria Group, or just a few of these other companies where they're heavily dividend focused. It means that they're very mature. They're not reinvesting back into the business. They're not innovative. So the only thing they can do is give money back to shareholders in buybacks and dividends. And that's nice to an extent, but you also want to see them reinvesting back into the business and growing that return on capital, right? So it's a catch-22 to an extent. And I feel like companies that keep their dividends in the 2 to 3.5% range are much more diligent over time of reinvesting back into the business and slowly raising the dividend. So for me, that was always kind of that sweet spot that I wanted to get to. And so going back to your kind of point, is I was always kind of like, okay, $100,000 a year in dividend income or passive income is great. It's $8,000 a month. But in order to get something like that, you probably need something close to 2.5 to 3 million invested, right? And so it's kind of like the amount that you want to get to. Like, let's say you want to get to 50 or 100 grand, divide that by whatever percentage dividend yield you want to get, right? And make it seem like if that makes you feel okay. So technically, you can find companies, if you want to make 100 grand a year in dividend income, that yield 10%, and you can have $1 million portfolio and retire. But are the companies that you're yielding in at 10% really the things that you think are going to help you sleep well at night? Or would you rather have a $2 million portfolio yielding 5%? And I feel like you'd sleep a lot better. So it's kind of that kind of like range of outcomes per se. And I started getting to the point where I would want to just rely on a very nice $100,000 income, specifically just off of, let's just say, the S&P 500. And I would feel very, very safe with something like that. And then if you think about it, if you're able to go from a 1.5% yield to just doing something small like writing covered calls and getting an extra 1% a year, not anything too big. Some people try to chase 1% a month, but you're able to do 1% a year and say options income, then you're going to be able to get, let's just say, $100,000 and say passive income, get a 2.5% yield. You go from needing $8 to $9 million down to $4 million. And that's not something that's too crazy. You could have literally $100,000 a year in income passive and having, say, $4 million in the S&P. I mean, that's something that's kind of like achievable, especially at my age. Like, with where I'm at in the portfolio, it wouldn't take too many doubles or consistent adding to the portfolio to really get somewhere like that.
Let me show you something that will just blow your mind. Okay. So if you take a look at this, right, this is just a quick retirement calculator. So let's say you have $2 million in the bank right now, right? You put it into the S&P 500. The S&P 500 typically grows at around, 7 to 8% annually per year, right? So put that into the calculation mix. The average annual inflation rate is about 2%, right? And how much money you've saved for retirement already? You saved about, $2 million right here. If you look at the schedule, and I don't know why it's not showing right here. Let me just share the other one. Right here, the schedule of retirement. Every year, like let's say this is 2023, you can pull $111,000. In 2024, you can pull $113,000 and go on all the way until 21, 22, right? That's when you'll run out of money. Because at that point, every year you'll be drawing almost $700,000 to live. Look at that. It's 100 years, right? So a lot of retirement is just about being in the right investment like the S&P 500 over a long period of time. And as you need the money, you withdraw it. So like right here, maybe you don't draw $100,000 from your beginning balance, and you only draw 50,000 because you were a little bit light that year in spending. That means that you'll have more money in the balance the year after that, and the year after that, and the year after that. Because remember, the compounded annual growth rate is what actually matters. So, you can retire on a lot less than people really think. It's all about how you spend your money in retirement, and how many years you really have to go, so.
Yeah, I'm trying to pull up the 4% rule, which I'm sure you've heard about many times. But there's a really good graphic that kind of shows. But what it did was it kind of back tested, find it, but it back tests basically since the Great Depression, really what you can use in retirement safely. In terms of, okay, we're going to average, say, 8 to 9% returns per year, X amount of inflation. What can I withdraw on a very safe basis, including years of drawdown, to effectively never run out of money? And to a decent amount of certainty, if you only withdrew 4%, then you would be okay. Because even in some down years, let's say the market declined 30% or 25% like it did in 2022, and you're only withdrawing that 4% of your total portfolio, you'll be okay because you're only withdrawing 4%. And then when it goes back on a tear again, like it did from December to today of a, say, 20-30% run, you're not pulling out so much that it can't still grow. And so what it did, and it showed, is like, well, if you pull out 5%, you're going to run out of money too soon. You pull out 6%, you're going to run out of money even faster. If you pull out only 1 or 2%, your money's going to continue to grow at an expansive rate. And like it was a sweet spot between 3.5% to 4%, where it was like you'll be able to kind of sustain your portfolio balance on an inflation respected level
basis
for a very, very long time. And there might be some black swan event that wipes you out. But the thought is if you do 3% or 3.5%, your portfolio is always going to slowly grow over time. And generally speaking, like you said, you're going to be increasing at, say, 6, 7, 8% a year after inflation, and you'll be good. You'll be able to get your money. So if you think about it in that respect, a lot of people, what they might say is you need 33 times your annual salary, or 33 times, not your annual salary, 33 times your annual expenses, or 25 times your annual expenses. So let's say, for example, your annual expenses are $100,000 a year. You need $2.5 million. If you have $2.5 million, you can safely pull out 4% a year, $100,000. And what it might be is maybe, say, 2% of that is from dividends. So you're getting $50,000 from dividends, and the other $50,000 you're getting from price appreciation. But that still leaves, even after the dividends, 2% only pulled out of your principal, and it'll still allow your portfolio to grow at, say, 6, 7, 8% per year, and it'll last for a lifetime. So that's kind of the thought process behind a 4% rule for anybody that's never really thought about something like that. And it might be able to give you an idea for especially those people that are like, well, I don't know what the fuck my objective is. Like, where do I even start? Where do I even begin? If you start with the end in mind and think just with respect to that, 25x your money, then you can kind of work backwards from there. And if you also think, well, generally speaking, at 7 to 8%, the market doubles every 10 years because of the rule of 72. Then you could say, okay, by the time I'm 10 years out from retirement, I need 12 or so X my money in annual expenses. So let's just say your annual expenses are, I don't know, $100,000. Then you need, what is that, $1.2 million. And so by the time you actually retire, you'll actually have the 25x your money. You'll have the $2.5 million that you kind of need. So there's a bunch of other rules too. Like by the time you're 30, you need like 1x your salary or something like that. I forget exactly what it is, but it's like by the time you're 50, you need probably like 8x your salary or something like that. Because by the time you get to 65, you need 25 times your salary for it to actually continue.
Yeah. What's your exit price like from life? Like after you hit this, that's it. I'm done. Matty Mullah is just retiring.
Well, I don't know if I told you this. So like, I'll just be blunt. I won't say the number that I have today, but before the pandemic in 2020, I crossed over, and I think I remember the number being 419,000. And so the number was 419,000 in 2020. And I saw that number go from 419,000 to like 280,000 during the pandemic in March of 2020. And it just took off like a rocket from there because I just kept investing all my money, and I was saving so much because I was living abroad, and so I didn't have any like housing expenses. I didn't have a car payment, all that stuff. So I just kept investing. And that's honestly when I changed from being like, oh, I need to get to $2.5 million. And that's kind of like my exit, velocity to be like, $2.5 million is not a lot of money. Like if like I was just like, I can get to 2.5 million. You know what I mean? And I was just like, that's not that much. I was just like, because I save so much, right? Like I save a lot, I invest a lot. I'm not silly with my investments. I do a rather good job. I'm not the best, but I do okay. And so it's like 2.5 million. If I just continue at this pace, I was like, where can I actually get to? And then you start getting like kind of greedy, and it's kind of like a game at that point. And I was like, you know what? I was like, I really want to kind of I would love to get to 8 figures. Like that's where I was just like, if I go at 8 million, like, and that's where I get to, I was like, I would be kind of okay with that. But if I only get to 2.5, I would kind of be disappointed in myself knowing where I'm at today.
Yeah.
Because that would mean I like basically sat on my hands and just let the money do its thing.
So basically Matt did very well for himself, and he's in a good place, but he's ambitious. You have the ambition behind you because you're trying to build generational wealth. You're not just trying to build your own, like, hey, I'm done. Like after.
I'm just trying to have fun with it now. Like,
yeah.
I mean, if I wanted to, I could, like you said earlier, it's like I could go off into the sunset somewhere in rural, God knows where, buy a house and just do YouTube full time and be okay. I could retire or go to Thailand and retire. But it's like, is that the game? And then I had a conversation with my other buddy who retired, a year ago, and actually is working again. He retired just, I think, to like go hike the Appalachian Trail, and he's actually working again. So I want to have him on here once because he's a cool guy, and I actually have to meet up with him because he's actually stationed in Galveston now, not too far away from me. And I didn't even know until he talked to him like last week or the week before. That's when I canceled on you, not last Thursday, but I think 2 Thursdays ago. I was like, I'm talking to my YouTube buddy. Yeah. That's who I was talking to.
Someone's like, what's your number, Chris? Bro, it's not me. It's the damn wife. All right.
Dude.
First of all, my goal in life is to eventually have one of us like retire working full time. I think I'll still always work because I'm a worker bee. Like I've been conditioned to be a worker, so I'd always have to have something that I do to just produce an income. Because if I don't, what am I going to do at home? Watch Judge Judy? So first of all, it's just getting that mindset of, hey, I'm retired. The other thing is my wife still has a lot of money in student loans. But the thing is, like, she has something called PSLF, which is public student loan forgiveness. So if you work 10 years in a nonprofit, you can get the loans forgiven. So she's only about 2 years away from that. So her butt's got to keep going to work every day. Get your butt out there. You took the loans, you're gonna goddamn pay them. So
but this is the truth though. Like I don't think you'll ever retire, right? What you do, you might retire from your 9 to 5, but I feel like you're the kind of guy just like me who's never really going to retire, right? Like wake up.
Bro, I've been a worker bee my entire life, so it's hard to get off of that mindset, But I do eventually want to get to a point where, okay, I'll tell you, and this is me being hateful, Chris. Okay, there is a couple on YouTube that I hate. Like I fucking absolutely.
I want to know which one it is. It gets me fired
Kara
up.
and Nate.
Nate. You don't like them? I like Kara and Nate. They're cute.
I fucking hate Kara and Nate. Okay.
Why?
Because they are living the life that I want to live.
Okay, so you're jealous. Got it. You're jealous. You don't actually hate them.
No. The reason why I'm jealous is because they had the balls to just give up everything and do this crazy shit where they're traveling all over the world. I can't do that. My inner Guju self will never allow me to do it.
Right.
It's like, hey, should we quit our jobs and go on like travel the world? It sounds nice in theory, but my heart is just so fucking like, no, beta, don't do it. Don't do it. You can't do that. That's white people stuff. Don't do it. So I just can't do it. So I look at them every time and I'm just like, bro, I hope fucking one of them falls off a cliff or something,
They're
I'm
great.
kidding.
So you
I'm
watch every
kidding.
episode, is what you're saying. And
Just see if one of them fell off a cliff. Yes, I watched episodes. No, I'm just kidding.
the thing that I don't get, no, the thing that I don't
Yeah.
get, I love watching them too, but like some of the stuff, like I could handle traveling around, seeing the different stuff, seeing the different cultures and stuff, but like I don't know, they started doing like island survivor shit, and I'm just like, no, dude, that's where I cut it off. Like I know they're fit people, but like being
Yeah.
able to do the survivor stuff, like that's not me. Like I couldn't obviously do that.
It's the best stuff, man. I just every time like it's almost just like I punish myself by watching them. I'm just like, why can't you be like them, Chris?
Yeah.
Like when you look in the mirror and you're just like, you suck. So I always look at their channel and I'm just like, why can't you do this, Chris?
But
I mean,
the
my
thing
wife
is,
could do it. Yeah, go ahead.
100%. The thing is like once you do a channel like that, a lot of that shit becomes write-offs. It's like all their
Yeah.
traveling, all
Oh,
their
dude, I
hotel
know.
stays.
I know.
And so I'm
I
just
know.
like, I have a channel name already called Matt Travels. And I have a few like shorts up on there from when I went to like the Dominican stuff. But like I've honestly thought about if I actually end up doing more traveling like once a quarter or something like that, because I have the freedom and ability to do so, that I'll probably make a small like blog channel and stuff like that just so I could write it off. And it won't be anything extravagant, but like I would like to get to the point where it's just me effing around and having this channel where I can use it to write stuff off on. And hopefully, some people that are in love with me on Matt Money will eventually also subscribe over there. But I don't have any content over there yet. But like my thought process is you have Matt Money, you have Matt Travels. I don't know what else I'll get myself into. But that's kind of the thought process.
You want to know the most content creators that get to a certain level, they understand that most people that are watching for like because they want to see them fail, right? And so they lean into that and create thumbnails like I just went broke. And then like the entire fucking video is not really about them going broke. It's just about them, because
wanting the drama.
Wanting the drama. Like look how many times have I gone where you see Graham Stephan or that lost all my money, and then you look at it, it's like, nah, hey guys, I lost a couple of $100,000, but I'm fine because this one YouTube video is going to pay me $1 million. I'm just like, fuck you, Graham Stephan. Fuck you for making me believe that your life was shitty and making me click on your thumbnail and then you telling me how great your life is.
I forget what argument Amit and I got into. I forget what it was. Oh, it was when he was talking about Dan Ives, the price is going to be 25 after 2Q earnings on Palantir or whatever. And like, I was just like, no, man. And like, I fed into it. I straight up messaged him to DM him. I was like, I'm going to feed into this because like people thought we were actually like upset at each other. It's like, it's business. So you have a different opinion than I do. But like, I think I made a thumbnail called, or like a thumbnail saying this is the end of Palantir Weekly. The title was this is the end of Palantir Weekly. That's like got like 10,000 views on it just because people thought I honestly was quitting. And I had people like DMing me like, you can't quit Palantir Weekly, man. Like you're part of the reason why I watch it. And I'm like, Jesus Christ. I'm like, I'm not actually quitting Palantir Weekly, but people chimed in just for.
That's where the whole thing to zero comes in, where it's like Palantir to zero, because people want to. If once you hit a certain point of success, people are watching to see you fail. Like today's the day, Kara and Nate, one of them falls off a cliff, baby.
You're gonna feel awful when one of them like seriously like injures themselves. And
this is fucked up, but there was one episode where what's his name had a bout with skin cancer, and I was like watching the entire episode. I was like, so someone's been going on the trails without their sunblock, huh? Yeah, that's right, Kara and Nate. I see you. And then it turns out it was negative, and he's recovering. And it's just like, God damn it,
Yeah. Nah, I like Kara and Nate.
I'm gonna get lectured.
I thought you were gonna say somebody like a couple that does finance channel sort of stuff, because there's a few that do like finance channels, and it's like they have 20 grand and they have like 100,000 subscribers, and they're just spouting off BS, but like they spout it off so well in a rudimentary way that they can get anybody to listen. And it's like you have people that follow them that have, and that's not to say that if you have a $20,000 portfolio you don't know what you're doing, right? But generally speaking, it means you're probably less experienced and you probably need a little bit more experience before. But I'm not saying like if you have $1 billion, you know what you're doing is investing, because that's not true either. But anyway, it's just like a a thing where some people just luck out, and I think that they hit a stride when YouTube is growing really well, and I think they're
Yeah.
both really likable. And I think Nate also had some cool businesses, like I think he
Yeah.
did a T-shirt printing business, and ended up just being able to make it.
By the way, I've because of my wife and like how nice she is, my hateful nature is gone. Like I don't wish like any ill fall upon Karen Nate. If you guys for some reason ever watched Cashflow Chronicles, don't think that I'm wishing upon one of you guys falling off a cliff, even though if it happens, that will be the first episode that I tune into that day. And I'll feel sorry for you, but I'll feel good about myself, but I don't wish it upon you.
Don't wish it. But no,
Yeah.
I know what you mean. I have people that comment on some of my videos where I like express some of my losses, and they'll like be happy and they'll be clapping about it. And it's like normally random people. And I think it's pretty funny because like there are some people that have a lot of, generally speaking, I get more overwhelming love than I do overwhelming hate.
Yeah.
But there are some people that just want to see you burn.
Yeah. Yeah. That's what is it? There was a quote from was it the Joker? Hold on one second. Damn it, man. It was such a good quote, but basically it's like they're cheering for you now, but what they really want to see you is fail. God damn it. I forgot what it was, but it was such a good quote. So I'm sure that one day we'll become the evil people on the internet.
Amit.
Where
I hate Amit because of his success.
you hate Amit. Who's the most successful finance YouTuber that you hate?
That I hate?
Mm-hmm.
I don't think I've ever dealt with anybody that like I've actually talked to that have actually become like enemies with or odds with.
So when I mean by hate, I don't mean like literally like hate them personally. I just am envious.
Hate their
of
success.
Them. I hate their success. Yes. I don't mean Kevin is on the top of the list for so many people. Yeah.
I think he does a good job. Originally I hated Amit. Not really hated him, but I was very envious and jealous, but he actually does a really good job. And so the way he structures his channel, after watching him for a couple weeks, before I really got to know him, I was just like, okay, this guy's legit. I mean, he's the thing that I like most about Amit is that he admits when he doesn't know things. And sometimes he doesn't admit when he doesn't know things. And sometimes he doesn't admit when he's wrong. But I'd say for his age and where he's at in his journey, I think he does a lot better of a job being humble and kind of letting people know, like, I don't know shit, but this is what I think. And he does a good job with that. And his persistence and work efforts are just undeniable. And I think he's doing a really good job with it. Some people, let me think, that have done really, really well. I'm jealous right now of Ryan Williams. I think he's got over 50,000 subscribers, and he does a live stream every Friday. And I think he's on the way to like 200 people. And he does a good job. I really like him too. And I've never tried to give him hate or anything like that. Every time I've like chatted with him briefly through like the comment section or anything like that, it seems very casual and really cool. The people that I dislike, and I won't name anybody personally, the people that don't admit that they're wrong or don't see other people's perspectives. So like for you, for example, like I respect your short-term sort of mindset, but you also see where a long-term mindset might come in. The thing that I hate is a lot of times what I might do is I might try to provide people that don't have a lot of experience a different perspective, and they completely shut it down. So there's a couple people that are dividend only till the day that they die sort of people. And I'll be like, look, like I was in that boat. Like I only did dividends, and that's where I kind of started off my portfolio. And I was my YouTube channel actually be called My Dividend Journey because that's all I really cared about. I started off at $100 a month, and I went to $200 a month, and I was like climbing up that dividend sort of annualized income from dividend space. And eventually I realized like I underperformed the market. And I got to the point where my portfolio was getting so large that I was like, I don't need $30,000 in dividends right now. Like I just don't. Like if I was retired or I moved to Thailand or I get laid off, I'll maybe transition a part of my portfolio to get that. But like it was getting to the point where just this last year, I think I made $25,000 in dividend income. I was like, I don't need that. So I was just like, for me, it's more prudent for me to get to the 8-figure mark and then transition to dividends if I need it than to do it. So I try to offer that help, but sometimes they just view it as me attacking. And then I'm like, when I point out like that has a 15% dividend yield, but it's going to get cut next month, and then it gets cut, like somehow I'm the bad guy. Like that sort of mentality bothers me a little bit.
For me, my arch nemesis is Graham Stephan. Not because of his success. It's because he's leaning into this woe is me thumbnails that just look at this. I just typed in Graham Stephan. I didn't put anything else. Graham Stephan. First thumbnails. America will run out of money by January 1st. Breaking. Government shutdown imminent, right? Help me. I'm rich, but I'm broke. Like everything right here. Like, are you gay? I don't even know why that one came up. That was actually kind of funny. You know, why haven't home prices crashed yet? Like, stop now. Why I stopped drinking alcohol? But it's nothing, bro. I don't think you even drink. You know, like just lost $50,000 playing poker. Now what? It's like, now what, bro? You do like $2 million a month. You're gonna be just fine. That 50,000 is. I don't even know if he actually even lost that. You know, so it's a lot.
I don't
and the
watch
thing is, like, a lot of people lean
anymore.
into that.
I watch his. I don't watch his main channel anymore. I did when he. I think I started watching him when he had 20 or 70,000. I forget what it was, but it was like very early on. He was really recording in one of his duplexes that he was turning over at the time, and you know, so it's pretty cool to see him rise. The thing that I really like watching now is the Iced Coffee Hour, which is his podcast, and he brings on a lot of guests.
Oh yeah, that's good. That's
the
good,
guests. The guests that he brings on always bring a really good perspective. They do it in person, and you know, he's had people on like. I think he's had Greg Cardone on. I don't know if he's had Patrick Bet-David on, but he's had a bunch of different folks on from different walks of life. And it always kind of, you know, they always had like a business lens to it, but a personal lens to it to like obviously get into what this person's personal life is like, where they came from, all that sort of stuff. I think they do a phenomenal job. And I'd love to have some more of that, you know, more guests on the Cashflow Chronicles. And I don't know. As the show develops and we have more time to do it, and we get richer and we don't have to work as much, it would be cool to be able to do that once a week or twice a week.
Yeah, there's just one last thing I want to watch with you guys, because this is the epitome of people that you should be very careful of when you're investing in the stock market. Okay, this couple got famous during COVID. I remember, if you remember these. You don't know them? Oh, dude, these are my favorite. Look,
the guy looks familiar.
Can you see that? Can you hear that?
Yeah.
Okay, let me just start real quick.
How do we make money from home? For starters, this is not a sponsored video. We just get this question all the time, and honestly, the answer is really simple.
So basically, I just trade stocks on an app called Robinhood, which I left a link in our bio if you want to check it out. It's free to download, free to sign up. They actually give you a free stock, so they're paying you to sign up.
Sweet, dude. Thank you so much for telling us about this. I mean, so you don't have anything to gain by telling us this information. So if we sign up for your Robinhood link, you're not just going to get free stocks and sell those for more money, right?
Again, not sponsored. And I know trading sounds intimidating. Here's my strategy in a nutshell. I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it, and I do that over and over, and it pays for our whole lifestyle.
Buy low, sell high? That was your plan? That was your secret? I mean, what is this?
You heard it here first, man. You're on mute. Yeah.
They figured it out. They figured out how to make money in this time. Buy here, sell there. Bro, how come I wasn't tuned into this?
You see, Chris,
really?
You know, this whole thing, you know, let me spray what you want to do. You want to buy low. You want to sell high.
God damn it, man. Fuck the Cashflow Chronicles, bro. I quit.
That's
all
it.
Right? Buy
That's
low, sell
do.
high Chronicles. That's what we need. Buy low, sell high.
Cash flow
That's
my
it.
ass.
Bro, doesn't matter. Everything we've been saying is bullshit. Follow this guy. That's the guy you should be following. You buy here, you sell there. That's it. Simple. Yeah. You know?
I will say though, before a lot like this, I feel like there's been a renaissance for the retail investor, and with this renaissance, like things like Robinhood, I get while people were giving out their codes and stuff like that. And same with M1 Finance. Like some of these things deserve a code, but then it got so overboard where like everybody's now trying to give out a code for God knows what. And it's just like, ugh, like Moo, Weeble, like all these different brokerages. And it's just like, come on, man. Like it just doesn't make sense for all these different brokerages. But hey, man, some people are just trying to do well. Like I do Fundrise. I don't really do Robinhood too much, but I use it for options chains. But I think other than
Matt,
that,
I've been doing it wrong, bro. I've been buying high and selling low. I should have been listening to these people. You see,
if you listen to the Armchair Investor, you would have been printing money.
Man, you know, Chris Patel's method: buy high, sell high, higher. You know,
Yeah,
that's what
buy
you
high,
wanna
sell
do.
higher.
Nah,
Yeah, I
bro.
don't know.
Google. That's where you want to be. All right. Well, it was a nice long episode today. Kind of made up for the not being yet on yesterday. So yeah.
Nice, man. Much
All
appreciated.
right. Later, guys. Take care.
Everybody check out Hot Chris's Patreon in the description. I appreciate everybody stopping by.
Take care. Have a good one. Bye.